How is it going, everyone? I hope you all had a green day today if you traded. Uh, we're going to take a look at today's daily plan, which is what you're looking at here, right? These two red levels and three green ones. I don't know if I included that last one. It may have been 2 and 2 like this. Nonetheless, daily plan worked out super well today. As we could see, low of day as of right now is this first buy zone. I took two trades today. One was not where I should have taken it, and I took a stop out. That was my first trade. I started the day off red. It happens. It's just something you have to deal with, but there's ways that we could help this, right? A lot of people would start their day red and focus on needing to make that money back, and then go and tilt. I think everyone's familiar with those sorts of feelings. So we're going to talk about it and just how to not have those emotions, or at least help suppress them. Because at the end of the day, you can never perfect your trading. You only can refine it and become better. So we'll take a look at today's intraday order flow, the makings of the daily plan. We'll go over my trades, a bit of psychology behind that. But first, I want to bring up the YouTube tab over here. I just want to say thank you to everyone subscribing. We had like an influx of subscribers. So thank you guys. I really do appreciate it. But I did want to go over this question I asked the other day. Is there any questions I could possibly answer from anyone? People who are curious about order flow or the TPO approach, right? Time, price, opportunity, or market profile, yada yada. Or people want to compare, or people who want to compare their readings to the tape, right? Maybe you want to send in your own analysis, and I'll help you and tell you what I see compared to what you're seeing. We have David here. He asked, TPO versus market profile. Where does it work better than the other, and which one to utilize for larger information reading, and which one to use intraday, which is a great question. So let me bring up my TPO or market profile chart. So creating my daily plans, I start every single morning with my TPO chart. Every single morning, no matter what, starts here. So let me get today into frame first. This was our overnight session, right? I always check to see what the overnight session did, and then jump to my 4-hour footprint chart and my daily, but we'll get to that in a little bit. So to answer your question, TPO versus volume profile. So this is the TPO, or a market profile for anyone who does not know. To read these, we look at the tops, we look at the bottoms, we look at the shapes of the distributions like this. This is a bell-shaped curve, or a capital D. We look at where value area highs are, value area lows, points of control. Are we overlapping? Like, are these value areas overlapping? Are we trading in balance, trading out of balance? Do we have structure to clean? There's a lot that we could take and have to take from our TPO charts. Now, I know they look intimidating, but for anyone who's unfamiliar or has yet to learn these, they're really not. They're simple, quick to learn, and when you do learn them, you just take a glance at it and you get the information you need. So, to answer David's question, sorry, I've got sidetracked a little bit. So this is market profile, and right here is volume profile, right? Market profile has to do with time. Volume profile obviously has to do with time. So on a volume profile chart, you'll see this orange. That's the volume point of control. That's where the most volume was transacted. But when you look at a market profile chart and look at not the volume point of control, but just the point of control, that's where the most time was spent, right? Time, price, opportunity has to do with time. So which one to utilize for larger information and reading? I would say the TPO charts, the market profile charts, and which one do I use intraday is volume profile. Then I'll use my footprint charts, right, which is obviously looking at transacted volume. Now, why? The TPO allows us to gauge the market auction, right? It makes the current auction more palatable. Looking at those things, like, are we trading within balance? Is the market happy to trade here? Are we trading without balance? Maybe we had balance, we're trading in this range, and then we finally see us break out. We close at the highs, and we're coming back, and now we're holding the lows again. Something like that, right? Just very simplified. But this is more towards a longer time frame, right? I'm not looking at this. I mean, I have the chart open to the side intraday, but none of my trade executions or anything is coming from here, right? This is to help build confluence of levels, right? Things that I'm seeing on other tools like the footprint, and just knowing the current market sentiment and auction between participants. And then volume profile, right? I use the the footprints intraday. Hopefully I didn't make that too confusing. Hopefully it makes sense there, David. If not, of course, please just, you could either email me or just comment on the video and I'll try to explain better. So today's daily plan, here I am on StockTwits. If you guys have one, feel free to follow me there. If not, YouTube it is. All right. So as I said, I create my daily plan starting here with the TPO charts every morning. Check what the overnight session did, and I'm looking relative to the past few days, but since I am usually here, I trade pretty much every single day except if I'm on vacation, like I was on Monday, right? I came back Monday, or no, I came back yesterday, but early in the morning, did not trade Monday, traded half day Friday, so I kind of had to catch myself up yesterday. But usually it's just glance, what did the overnight session did, and we can look here, right? We had a balanced overnight session, and we're looking relative to where we are in the current market structure. From there, as I said, I come over here to the 4-hour footprint charts. I say it over and over, but the 4-hour footprint chart is my favorite time frame for a day trader. Why? It gives us so much information that is very, very useful. Things like, when we're balancing here, right? We had a few days balance. You guys remember old daily plan that had this level, I think it was 4102 to 07 maybe. Old buy zone here, but nonetheless, that was Monday's low of day, right? And that was actually Monday's day type is my favorite day type. We were at a key inflection point, which was over here, and we had a balanced day, right? And it just provides so many opportunities to just be able to scalp off this, right? It's a race now, obviously, since we traded through it and whatnot. Where was I? All right, so on the 4-hour, we could see things like, are we in balance? Do we have an aggressive bid down here? Do we know that liquidity, right? Where's this liquidity? We have relative lows over here, right? When you go long, you put your stop underneath lows. We run the lows, have exhaustion, right? Signs for a long, towards the low end of this marked area, which we go over in the room, right? How to mark these areas, what they mean and whatnot. From there, we come back and we balance this overnight session, right? Building out volume. We already have volume over here. We have an offer, right? The tape is telling us this is an offer. We go to our smaller time frames to confirm this. We go to our daily, right? There's a whole bunch of different things we have to do. And then I go over in the room. So I go from the TPO, I come here to the 4-hour footprint, and then I come to the daily and I do the exact same thing. And you guys could see here, I post here on YouTube as well, but I annotate all these, exactly what's going on, what I'm reading, and I send it out in the Discord server. We have a daily plan tab. Yeah, so let's go over my trades. I took 2 trades, as I said. Let me bring up the picture. All right, here we are. I just wanted to show the executions. I know it may be a little bit difficult to see, but I'll zoom in. So my first trade over here was not at a key inflection point, right? We know where the buy zone was. It was 20 to 25, I believe. Let me double check so I'm not saying the incorrect thing. Yes, 20 to 25 is where I was looking to be a long. So out of picture to 25 down here, right? And I took a trade not at a key inflection point. Okay? And we could do that. If the tape is on our side telling us that this is something to be taken, take it, right? But we didn't have that. This was just, I came back from vacation. Monday was just a picture perfect day that I missed. I come back to my trade or to my desk yesterday, feeling groggy, still, have some jet lag, and I didn't take a trade. I thankfully did not take a trade, but then I came here now Wednesday and I'm itching for a trade. I want to take a trade, and I succumbed to those emotions. Now, it's not something I do often. Obviously, as a beginner, it was, and that really for me was my probably biggest lesson, and that was my turning point in my trading, was accepting the realities of trading. You see people online flexing gains every single day, but the reality is if you're going to be trading as a career every single day, you aren't going to end up taking trades every single day. You have to have the discipline to wait for your setups. So we trade down into the buy zone from 25, And we come down here and I see exhaustion on our lower time frames now. We start building a bid and I'm going long with a stop run, right? We accumulate this bid here, whole bunch of breakout buyers come right here, stop them out. I'm longing their stop out and we're off to the races. So I took 50% off here at my risk 2R, risk to reward profile, if you're familiar with that. So that paid for this. I took, I want to say it was 10 or 15% of my remaining position here just to pad my wallet. And after this first partial, always after my first partial stop is break even. So I took this off just to pad the wallet. And then we had a structural level over here. I took off 50% of my remaining position, and then I had my all out here at 41.50, which we were just 2 points shy of, and I got stopped out at I moved my stop from break even. Once we came up here, I saw that an offer was building here, so I moved my stop up 2R in the money, and I was filled just 1 tick less. So it is what it is. It was a really good trade. Not perfect though, right? When we look in our higher time frames, little clue here, we don't have clean exhaustion at the lows, and when I pull up the daily, we don't as well. And we didn't have that on that first trade, if you remember, that I took. But what's the difference between these two? This is at a key inflection point. So yeah, I would be more likely to take a stop out here as if we did, or compared to if we did have exhaustion, but it's worth the risk to reward here. If you guys remember, I think it was last recap I was talking about trading, you have to minimize your risk exposure. And I exposed risk at a foolish level at that first trade. The second, it makes more sense to expose your risk there, and of course, as we saw, it paid off. Is there anything else I want to go over? So let's talk about having that red day, starting off red, and just all those emotions. So the way to get around this, at least personally speaking for me, is systemizing your risk, right? First, if you're getting emotions that you're getting stopped out, or like you're red, maybe you're went red, had a red day on a Monday, and now it's Wednesday, and you're really, really stressed. If you're super stressed like that, you're trading too much size. Simply, you have to size down. So sizing down to a point where you don't really care about the money, you just are maybe upset or angered by being wrong or whatever. That's what you want. You don't want to be trading with size that if you were to go to sleep, you couldn't sleep, right? But systemizing my risk, right? I took a loss of 3 points was my stop loss. So that was ugly. So I get -3 per on my full size, of course. So -3 points per contract, and then in that second trade, I took 50% off at my 2R, or 6 points, right? So that paid for that. I only took half my position off, so it paid for it evenly, but if I were to close the whole position there, I would have ended up with +1R, right? Just, you have to systemize your risk and have a risk to reward profile that works, right? So I'm usually taking off my first profits at 2R, and I could pay for those losses, right? I have a good enough win rate that I could not have to take off, say, 80-90% on my 2R. I could take less, right? Have to systemize your risk, and that's simply put, but I'm sure most people are familiar with the term risk to reward and risk to reward profiles. I have a webinar in the room about it, but it's really, I feel like amongst day traders, it's pretty common knowledge. I feel like I've spoken so much in this recap. I'm sorry if I put too much fluff in here, but if you're interested in this day trading approach, right, I day trade and I trade the E-mini. I don't trade NASDAQ or anything, just the E-mini. And you're interested with TPO, footprints, and all this stuff that I use, right? I use market auction theory as well. I have a small Discord group that you're more than welcome to join here, or if you're an already successful trader and just want to compare your readings to mine, those annotated charts that we're looking at before, you could just have access to the daily plan tab on the Discord and take a look at that. Up to you. Thank you guys for all the support in the videos, the thumbs up and the subscribers. I really do appreciate it. I'll see you guys in the next recap.